Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, June 13, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on that docket today? Well, all in all, the market pretty much ate time off the clock in a rather narrow range similar to yesterday. Every opportunity to go down and either retest the trend line or fill the gap left open a couple of days ago, decided to run sideways one more time. Doesn't necessarily mean we'll run sideways tomorrow. We're just taking account of where we are and what happened today. That's the first order of business. What's the second order of business today? Well, it's a little bit different than most days. We have a little unique thing going on. We have what we'll call a Father's Day giveaway. What am I giving away? Well, I'm giving away to 3 traders a month access, free access into the live trading room. No strings attached. Here's the post on X, formerly Twitter, picking 3 lucky traders for a chance to win a free month of Inside the Numbers. Here's what you have to do. You follow this Twitter account, Market Forecast, right up here. Like the post, tag 2 friends, and retweet it. You're entered in the contest. We track it on our end through Magic. And sometime on Sunday, I'll announce the winners right here on Twitter/X. Go ahead and pay a visit over to the X/Twitter account and enter the thing if you want. Getting back to the SPY. To further the assessment of where we are, where's the market? She's bullish. She's above everything. She's getting a little bit extended. We talked about it last night, a little bit far from home base. But if she goes sideways, home base will creep up toward price and work off some of the extended distance away from home base. See how that works? Today we had a classic trade on our hands. If you just look at the big picture, low yesterday, low today was lower, spike the low and rip it back up in the other direction trade. Not every low works like that. Some of the lows work like that. There are characteristics, there are setup rules, if you will, but nevertheless, it's one of our morning trading favorite live room trades. The quote unquote spike the low and rip it back up in the other direction. We do that trade almost every single day at some point, somewhere, on some chart. Nothing new to report on the weekly chart. She's just pushing up above the trend line. Period. Full stop. Nothing wrong with the tape. Going the other way, just picking out a 2-hour chart, for example, all she's doing is eating time off the clock after yesterday's CPI data shuffle gap higher open. Hourly chart, same routine, only you could see where she spiked the low, ripped it back up in the other direction. And here's another thing. This is what the live room traders heard today. From an intraday perspective, and I know most of you really don't understand what I'm discussing when I say waning velocity, but it happens almost every day at some point during the day. We'll get waning velocity, whether it's on the upside or the downside. And in this case, today we had intraday waning velocity. What I told traders is that it should be finished, meaning the market should have waning velocity if they reach right around 539.50, give or take. And as you could see, the net was what happened. She went down, reached that area, and went back in the other direction. Now, here's the other part of that phenomenon. Might want to follow this along. Just for purposes of numbers, just follow along. We had 2 numbers today. We had, and you'll see this later when we go into inside the numbers. But I'm just going to give you the Cliff Note version right here. We had 541. We also had a number down at 538.50. Okay, fair enough. But wait, there's more. If you take the difference between 541 and 538.50, just split the difference. You come up with 539.75. That's the midpoint in between those 2 numbers. The market low today happened to be 539.59, just 16 cents below that number, right at the point when I told traders that where you start getting waning velocity. We have what's called a midpoint phenomenon. We discuss this in the live room each and every day. It's even taught in one of my courses or both courses, the midpoint. It's not called a phenomenon in the course. I call it now a phenomenon. In the course, it's called a midpoint. I'm adding a little pizzazz, but it works a lot of the time. Even traders in the live room pick up on this, and they're already geared up for a possible trade at a midpoint area. How do you like dem apples? Now, in order to get the full picture, you really had to be in the live room today to understand what I'm talking about, to see it in real time, to understand it before, during, and after the fact, so you can see it in real time and do the assessment. And by the way, help a brother out. You know what I'm talking about. I'm not the brother. All the other traders are brothers out there. Help a brother out. If you find the live room beneficial, do you learn stuff? Do you make money? Post it under the video. Let other traders know out there that this is the real deal. That's all I'm after. Not hearing it from me, hearing it from the traders that participate each and every day. If you're in the live room and you're so inclined, do me a solid, post a comment under this video in the comments section. Net, if they continue eating time off the clock, they'll be poised to make another move higher. Could we get a floater Friday to new highs once again? Absolutely. We'll find out more in the morning. We'll have the daily assessment, the daily schematic, and we'll go from there. There were others today, but this is one of the trades that I gave out to traders in the live room. We would have liked them to come into the number down here. That was a trade late in the day after this shimmy. This is not necessarily the best trading opportunity with limited time left on the clock. However, the takeaway is what? Repeat after me. The numbers work. Inside the numbers, what do we have today? Net, we're just going right to, let's start with today's pivot coming in at 541. Posted at 0:30, long before the markets open for business. 541 is your pivot. Right of the vertical is today's activity. Blue horizontal line is 541. You could see during the morning session, that was certainly of interest / pivot-ish. We were trading around this on the long side when they hit it. They gave a few bounces, but it took a while until the afternoon session when they recaptured it and went back up. And as you'll see in the notes, it's all about a recapture of 541. And if they couldn't do it and they started leaking lower, we knew where they were going on the next leg down. There's your 538.50. They certainly never got there today, but this was on the board at 0:30. What else we got? Well, we had another 8:30 a.m. data shuffle. It was PPI today, so they popped it a little bit, sold it back off. They didn't really do much by the end of the morning session. Now let's check this out. Here's the situation this morning. They're hanging around a resistance zone not far from the all-time highs just made yesterday. The zone is 542.65 up to 543.40. Below the zone, meaning below 542.65, opens a door for her to fall back down toward the pivot, 541. That's interesting. That's an opportunity. Above the zone is bullish, below the pivot, which was 541, and the bears make an appearance to try and push price further down. So all this stuff is on the board before the market opens. Let's check out the resistance zone. There it is. What were we doing in the live room? Got on the air, said, look, they're in a resistance zone. Traders have a choice. Some traders won't like this. Some traders will be all over this. We have every faction of traders, some aggressive, some not aggressive. There's something for everybody. Not every trade is for everybody. I recognize that, and traders in the live room recognize that. So I said, if you want it, you short it in this zone, and they got a nice ride down, multiple exits on the trade. We had good participation on the short side in the live room right out of the gate. How you doing? Where were they instructed to cover after the scalp portion, which is 5 to 7 S&P handles, 50 to 70 SPY cents. That's my version of a scalp. Where were they instructed to cover after that? At 541. Pause the video, read the notes, go back to the chart, and double check the work. Below 542.65 opens the door to fall down to around 541. They did that. That was posted long before it happened. 937, traders that shorted the tape within the resistance zone have been provided the minimum required base hit. Holding a trailer for the gap and the pivot of 541 is fine. Pause the video, read the notes, go back to the chart and double check the work. And then you could see here, by 1040, we're talking about 541. Staying above is the bull case. Pause them, read them, go back to the chart to double check the work. It's all in here. Everything you need to know to have success trading the S&P and a whole lot of other stuff during the trading day. Targets, where it's wrong, meaning the trade, entries, the whole ball o' wax. We only had 2 stock on the move opportunities this morning, Fro and Play. We'll take a look at Frontline. Play didn't hit its number. It's off the deck. It's off the chart. No harm, no foul. Fro didn't really go anywhere. They spiked the first number. They got a little bit lower. They came back to the first number. They closed a penny above the first number, give or take. So therefore, we're just going to call this, they hung around the first number all day long. They never really got too far away. This one we'll just call a dud. About NVIDIA. So check this out. We're working with this trend line from the live trading room. So they gap up above the trend line, and did we have traders that were buying around the trend line as they came down to run a test of it, playing for a bounce off the trend line? The answer was, yes, we did. We'll give that a funny how that works. A lot of stuff going on each and every day in the live trading room. A lot of learning, a lot of chart lessons, a lot of stuff going on. What's going on over in Camp IWM? Relative weakness again. This is becoming prevalent. Once in a while, we get them to follow suit or have a relative strength day. But all in all, for the most part, over the last several trading sessions, we've had a lot of relative weakness in my favorite market leading indicator. IWM was down $1.78 today, about 0.9%. It was down nonetheless. They filled their gap down below, left open from the 11th on Tuesday, and they bounced off of it. Still in a different position on the chart, watching it closely. Now all of a sudden the weekly chart becomes very important. Where are they going to close the week by tomorrow? Friday's close. Back above the 20-period moving average. At this point, we're not using it as support or resistance. We're using it as a guideline. Back above all the moving averages, trend is your friend. Below, and something else is developing, even below 1. You go to the 4-hour chart, she's below all the moving averages. Go to the 3-hour chart, below all the moving averages. Obviously, 2-hour chart, same routine. So you see something else is going on in Camp IWM that may not be noticeable or prevalent, for example, on the weekly chart. You have a lower high here. Is that going to be a lower high, or are they going to try and rally up again? We'll see, but right now, at present, there is some weakness out there, relative weakness in the IWM, my favorite market leading indicator. It's a puzzle piece. It's on the table until the divergence resolves itself one way or the other. That's the information we have today. Speaking of divergences, we have the transportation people now. My second favorite market leading indicator, a number 1 canary in the coal mine, also down 160 points today, a little over 1%. So relative weakness against the S&P. Second favorite market leading indicator, but a number 1 canary in the coal mine. We're taking stock in what's going on, no pun intended, with the folks down at the transportation department. You got lower highs and higher lows. Something will give at some point. They have plenty of time left on the clock to decide. They don't have to decide tomorrow, but once they break either out of the top end of this channel or at the bottom end, down below the bottom end of this trend line here, that will be the telltale sign. Bouncing back and forth is nothing definitive just yet. This is a long-term look at the transports. But what I will tell you is when time is up, time will be up. But I just want to show you, if you project out in time, this could go on all year long. This is already out to December. This doesn't have to end. It can end. It may end, but it doesn't have to end. And if it goes back and forth in this channel, that's all they're doing. And there's a lot of points from up here to down here. So the point is that this is a long-term view. This is not something that you would expect to break the downside or the upside, for example, tomorrow or next week. It's not going to happen. What about the Q people? Anything going on worthwhile to discuss here? Not really. Up $2.50 today, give or take, 0.5%. Relative strength against the S&P. They're still buying tech. Nothing wrong with this tape. The only thing you say when you look at this chart, or what I say, is she's getting a little bit far still, like yesterday, from home base. Therefore, she'll either pull back or go sideways, and that's just the way the market works. From where? We don't know exactly. We're just aware. It's an awareness that she's too far from home base. That's it. XLF staying below this trend line is bad news for the XLF. Found support today at the 100-period moving average. We can use that trend line above as a bogey. What does that mean? Back above, a recapture of the trend line and a recapture of the breakdown candle high at 41.32 will break the chain and send the XLF back in the northern direction to and likely above the 20-period moving average. Stay below the trend line, there's trouble in paradise. Below 40.36, Irene could be coming to dinner. XLF. About smash mouth, anything wrong with the semi space? Absolutely not. If there's nothing wrong with the semi space, chances are there's nothing wrong with the tech space as a whole. Semis are a good proxy for the tech space. You find a crack in the foundation of the semis, and you'll likely find the crack following in the NASDAQ, composite, triple Qs, all of the above. Right now, it's a melt-up situation, far from home base. That will resolve itself from what price? Well, all you have here is 270 as the next big fat round number. Then you have 275. You don't really have anything else. I don't have anything else at new highs to really lean on. Therefore, we have to do what? You got it. Repeat after me. Wait for a sign and or signal of a trend change from a trading perspective that gives you something to trade against. We don't have that right now. You let them go. You be a spectator in the SMH. That's all you can do from where I sit. I want to talk for a second about something a little different. How about gold? So gold's teetering on these lows here. You have a set of lows here. Let me just mark them off. You got a set of lows here, and this is just logic. And you got a pivot low here. So the market said this stuff's important because it already bounced off this area. Doesn't matter why, doesn't matter anything. All that matters is she did. We take what the market did, we look at it, and we say, well, something down there was important. Therefore, there you have it. She bounced off of it. Next scene shows we got another pivot low. So this stuff down here is important. Now, you give that up, and I want to show you something different. I want to show you what I think she's doing, what I said she would do a long time ago, which may be an opportunity going forward. Now, it doesn't show up on this chart. Let me get rid of these lines, and I'll explain this. It's a little bit sticky. So if I go to a monthly chart, all right, and if you remember, I had a trend line at these highs here, but this looks different than it did before, okay? So if she came back to run a test, this is a breakout area. It's also a big-time breakdown candle high area. So the market ran up to here, rejected, tried it again, rejected, tried it again, rejected. Finally broke out, and therefore, this is a bona fide breakout area. Only I have one issue with it. Looks different than my other chart. My other chart from my other platform that I've been using for like 20 years. This is what my TradeStation chart looks like. These are not the same pivots. This comes from the monthly chart, and those are the pivots on the TradeStation platform, and this coincides with around 2250. Same concept, only this number is a little bit lower. This number's down below 2100. I've got it at around 2250 as the breakout area, which they will eventually run a test of, and it will be showtime when they hit around 2250. Can they spike it by $30 to $50? Absolutely. But they're going to fight 2250 under normal market conditions. Write that down, put it on a sticky note. GC Gold Futures 2250. Come over here to a weekly chart. Here's a breakup candle. There's the low. What's the low? 2249. Are they going to have a bull-bear battle when they get to the weekly chart breakup candle low and the weekly 20-period moving average? And then you have the thing from the other chart on the other platform. 3 guys tell you you're drunk, go sit down. Got a lot of stuff going on at 22.50. I told you it was a little squirrely. Everybody knows I'm bonkers. I look at stuff other people don't look at. I came up with 22.50. Take it at face value. Write it down, put it on a sticky note. If I told you how much I appreciate each and every one of you, without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.